Hi all, welcome to the daily charts, and let's get right into it. How to aim for a 10% daily return day trading. Obviously we're going to day trade US stocks, long or short. So up front, this statement is a little bit off because a 10% intraday return, that sounds a bit crazy. But once you get into it, those who know what day trading is all about, it's possible, doable, and I will explain exactly how. And now, what does it mean, a 10% daily return? Let's say your account is $100,000. Obviously, the idea is not that you're going to get a return of your whole account in a one trading day. The idea here is that you can get 10% return on your average position. Let's say your account is $50,000. Obviously, not a position is not going to be $50,000. A position is most likely to be $10,000 to $20,000. Assuming you're trading a US platform, you have $50,000 and anywhere between $100,000 and $200,000 buying power. So let's say your mid-range in terms of aggressiveness, and your position is $20,000 or $10,000 or $30,000. Being that we're talking about percentages, it doesn't matter that much. So now if the position was to be $100,000, it can raise some eyebrows, but I will explain. So let's say your average position is $20,000. Let's say you buy, for example, let me give you an example up front. You buy JFrog. The price of JFrog is $60, and 1,000 shares are $60,000, and 350 shares are $20,000. So is it doable to buy a position of JFrog of $350, 350 shares? Is it a big position? No, it's not a big position. Okay, let's move to another stock from the list, and I will explain the list in a minute. Akamai. The price of Akamai is $88. Let's round things up to $100. Okay, so you buy 200 shares of Akamai, that's already $20,000. So you understand, but then when you're talking about US markets, and I'm not talking about stocks above 300 or 400 or 500, any kind of stock, and the position is $20,000, we're not talking about huge quantities of shares. Most of the quantities are going to be most likely anywhere between 500 and 1,000. Assuming the share price is $20, then you buy 1,000 shares. Again, it's not a big position by any criteria. Okay, so we worked around that. An average position is $20,000. So how many positions are you going to trade in a trading day? 1, 2, 3, 4, 5. Again, that's more like a personal strategy, but let's say you're working, that's your job, you're day trading, you're starting to trade in the morning, and you trade pretty much until the 3:30 in the afternoon. Can you take 5 positions or 6 positions? And the answer is obviously yes. I will explain what kind of position in a bit. But the idea here is that you don't make 10% per one position. So you make on a position of $20,000 on one trade 3%, on another trade 1%, on another trade 5%, and if you're very lucky, once every couple of days you will make a 10% intraday move on one position. So one position of $20,000, 10%, it's $2,000 on that particular position. Again, I will explain in a minute how. Okay, but first of all, let's get into how we can find the right stocks to trade, and the idea here is very, very simple. We will trade stocks that are after earnings, that trade at least 5 million shares. You can clearly see here on the basic longs and the criteria for the search. So it's a smart search. You need stocks that are trading over 5 million shares. Not a big deal in the US equity markets. You want stocks that are already up over 8%. Or over 8%. and you want stocks that their intraday range is 10%, and you want the price of the stock to be above $10. Now keep in mind, this list is a breeding list. Okay, in the morning you're not going to have that many stocks in this list, but by midday the number of stocks populating this list is going to be relatively big. And of course, at the end of the trading day, assuming the market is not crashing, the list is going to be way populated. But the idea is not to start trading obviously at 3 p.m. The idea is to start trading from the list around 10:30 to 11. And you have some of you, and obviously have other strategy when you want to trade the early morning session, like a gap up and go strategy. But that's beside the point right now. So the idea here is that if I have 15 matches, let's say right now it's midday, I have only 6 matches. So I'm lowering my criteria of let's say of a percentage move from 8. Let's move it to 4, or the trading range from 10 to 6. So you can clearly see how many stocks are being added. Now, as a day trader, I cannot deal with 40 stocks. Obviously, I'm going to start with the top ones. But the idea here is that I can trade or search at any point anywhere between 10 and 15. Not trade 10, but search. Okay, and I have obviously on my trading platform anywhere between 10 and 15 charts open with the right resolution, meaning 2-minute, 3-minute, or 5-minute intraday trading charts. Now let's take a look at this list, and you'll understand immediately what I'm aiming at. So, for example, let me take a look at the numbers. So you can clearly see GMED up 35%, JFrog up 26, TNDM 20. EOS Energy 20, OS nearly 20, Expedia 18. Hold on a second, guys. Okay, sorry about that. My dog is not very respectful. Anyway, let's take a look at this list, and now you understand that there are so many trading opportunities. Again, we are trading the earnings season, and there are plenty of movers, and I'm talking only now about longs. What about shorts? That's another part of the equation and part of the potential. But let's take a look, for example, at GMED. It traded yesterday, sorry, it was Friday, so it traded volume 12 million shares, ended up 35%. Okay, let's take a look at the intraday chart. Because now, hold on a second, guys. Let's move to the 3-minute intraday chart. Let's increase it a bit. Now basically this is now where you're facing, all of us are facing the challenge. So it's very easy to search for the right stocks. Okay, it's very easy to, but it's not very easy to enter at the right price with the right stop loss and make money. Okay, so this is the real work of a day trader. Where do you enter the trade? You want to obviously enter the trade as early as possible. But the idea here is that the search is relatively simple. So don't be afraid you cannot find the right stocks. No, finding the right stocks is not the problem. Finding the right entry point intraday is the problem. And again, you need to apply a lot of rules. We're not going to discuss the rules right now. I'm just pointing to the potential. So let's take a look, for example, at GMED, probably a biotech stock, up on some news or positive news. Anyway, so why is it easy to observe the stock? Because it gaps up a lot. Okay, so it gaps up a lot. It's already on your screener, whether you have a smart screener like I just showed you, or a stupid screener. Now the idea is to find an entry point. So again, where do you enter? You enter at support, at a round number. You enter at a reversal using the VWAP. I mean, there are so many trading strategies that apply to this stock. Or maybe you're thinking, I cannot find an entry point. They are on my list. I have 20-30 candidates. I'm not going to trade GMED. Okay, and it's not very easy to trade basically GMED. So you go for stock number 2 on the list, JFrog. And now we're talking different scenario. First of all, the stock has a clear uptrend. You can buy the pullback. You can buy the reversal up from the VWAP. You can buy the pullback to the round number midday. So there are plenty of trading ideas how you capture a trade. Having said that, you need, despite trading a lot of opportunities, you want to trade according to a very strict risk management rule. And the risk management is, keep in mind, your aim is to make 10% in 4 or 5 trades. Sometimes it will be delivered in 1 trade. But the idea is, if you're taking a $20,000 position and your aim is $2,000, you can make, let's say on average, on 5 trades, 2% per trade. However, how many trades you're going to lose? So you're taking 5 winning trades, on average each one delivers 2%. Okay, what about the risk? We know about the reward can be amazing because those are stocks that are gapping up, increase their trading, all of them on increased volume, increased volatility, all perfect. What about the risk? The idea here is to risk per trade no more than 1%. That's basically how this strategy is workable, applicable, and doable. Because if you risk very little and you trade the best movers in the market, the risk reward is in your favor, but you cannot increase the risk. So if you're trading Frog, a $60 stock, you can risk only 60 cents on the position. And if you're trading a $100 stock like a $200 stock like Expedia, which is a $250 stock, so you can risk $2.50, which is 1% of the price per position. Okay, that's what you can do. Now, the bigger the volume, the bigger the gap up, the higher the volatility. Again, you need to find, and it's possible and doable to do it if you are, an experienced trader or familiar with this strategy. If you're not familiar, please take our mentorship. Do practice. It's doable, and again, if anybody has a question how to better approach this trading system, please get in touch with us either through our email or in the to our YouTube channel. Basically, the idea here is that you need to trade, work. It's not a one trade and go. That's not the idea, to trade one trade for 10%. It's possible that you're going to enter a trade and eventually it's going to end up with a $20 stock will move up $2, or $80 stock will move up $8. It's possible, but this is not the aim. The aim is to grow 3, 4, or 5 trades into a 10% return, which is as good as a one trade for 10%, and take care very carefully and aggressively about the losing trades. Okay guys, I hope it was clear enough. Like I said, do email us, comment, and again, it's not something that it's out of the blue. It's doable. We are teaching this strategy to plenty of day traders. If you're interested, you're more than welcome. Thanks for watching. Do like and subscribe. See you in our next video.